All right,
Holding 71.
Here we go. Right elbow gap open, shorted it right down here. What are we looking for on reversals? We're looking for everything to immediately turn to an ascending valuation, taking out the previous down bar. You have to have follow through. This must go north of 85. This 1921 here, 28 is the high. We have to go back toward that value. Let's make that clear on the opening bell. Right now, we're 3 minutes within the first, in 3 minutes, we'll have the first 15-minute bars out of the way. And the thing about it is, when you have a volatile opening bell, and you're coming down and you're testing the previous half bars, is that you hold and that you have the follow through, that the diamonds are ascending in value at the top, but you must have conviction going through that upside move within the first 12 minutes of the buyer and sellers, taking a look at what that gap was, how that teeny was 1, 2, 3 teenies perfectly, Tina, and 1, 2, working on the third teeny back up on the opening bell, and this is all correctly how that this is working right now. The opening bell tape has been working extremely fast. It's even locked up my computers because the prices were running very heavily. It is the end of the quarter. It is a Wednesday morning. It is 6:43 a.m. Pacific Standard Time. It is 9/28/2011. It is the SMF MMT Market Makers live on this opening bell, watching for the big turns that they knew had to happen in the IR. And this 0.23 must continue to rise there in order for these tops to be taken out. And when we get up here, we're looking at that diamond high reversal. Okay? That's the opposite of the diamond when they dropped them down in the negative side. Now, we have to continue with another big buy bar. We've got to have bars like this on the green side. So we'll let it set up. 65 is key at the price action. 21 is key that it stays weighted. That's the 3. That's the 6. Here are the tops. What are we missing? The body of the bar must go above the diamond and go through the teeny lines now. And we're 1 minute from the 15-minute bar. Here it is right now. I've got a 1 diamond, a 2 diamond, a 3 diamond, a 4 diamond, ascending 1, 2 teeny price action. And I just have that breakout right then and there, and I pegged that ratio. It was at 2.8. I hit 3.3. Look at it. I'm printing on that ratio high. We talked about taking out this down. This is the part right here. And we did it. And that is the qualifier. 2 teenies. And that's what every MMT wants to have happen in that price action breakout. And we're letting these things run over here. Where are the $600 calls? If they ever do get back up there, I will take $550 for those. You hear me?
$550 sell to 600s?
Yeah, you damn right. And let's see what happens over here with the continuing breakout, with the elevation. Now remember, I just hit 646. We're just starting a new 1 minute, 15-minute bar. Okay? So within that first 15-minute bar, this is where that teeny breakout expansion happened. In the bid, the ask, here are your diamond support levels. But what you wanted to see is that when you take these out, when you're coming up, you always want to see that buy side action there. This is what we talked about. And we always want to see that. And we did. Now we're going to see within milliseconds. No, because of the high-frequency robots were part of that. And you can see from the dot back, it's not a closing one, but this is where you're going to start to see how you can set up a new base and that you can regain consciousness over here back to 97 or build a base here on the opening bell on the Google.
Google at 76, 74,
right here,
72.
right now.